Right, everything looking good. We are live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8:02 p.m. Eastern Standard Time on 12/11/2022. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so obviously a big week, lots going on. Arguably, you could say lots to look forward to, but we are expecting the big rate hike. Looks like probably 50. I wouldn't rule out 75. I think 25 is far less likely. So that's obviously going to be a big catalyst for the market. Big catalyst for, what's to come. So we're going to take a look at the rates, kind of break it down. Did a little bit of leg work here to kind of identify what we could look for. What could we expect from the markets going into the future from when the final rate hike happens and the pivot. That way we can be prepared for essentially what's going to happen. So real quick, we'll get started with TNX. So TNX had a nice little run up there. It's been correcting for some time now. Recently put in a low. Now we're starting to take out some key levels these last couple candles, back testing the 8. If we could push up here slightly higher, close this gap, retest the 21. Seems like the most likely situation. That would be a push up to about 3.676 from where we're at now at about 3.566. We are getting the hard buy signal. Still in the bearish control zone for now. Multiple green histograms. Still red slope line. Still below the zero line. But first signs of life, at least for a potential bounce. And, this is basically what we're expecting. We're back testing the previous high in a constructive market. What you want to do is put in a high, retrace part of that high, move up to a new high, back test the previous high, and then, just continue on in that cycle. So U.S. oil, very important here. Obviously, everybody's been extremely bullish on oil. I'm bullish long-term on oil, but the truth is, everybody's been wrong this whole entire way down here. Now we're actually confirming into a bear market. We backtested the 200 exponential, got rejected 3 times in a row, basically. 200 simple and 200 exponential both foot bearish. And now we've gone to make new lows. That is as bear market as it gets. So we see essentially what we did was we had this descending channel. We had a little pop to the upside, back test, failed to even reach a 200 simple, which means that it was actually really weak. And then from then, we retest the lows, break down from those lows to new lows, and we would expect to see, roughly something the same size as our initial push down. So if this was our A, that's our B retracement, and now we're expecting a C leg. The measured move, likely target of the C leg would be our next major market fib right here, which is a 382. So $60.48. So, we've had a target for like 62 bucks for a while now. And obviously it looks much more likely once we're at 72, than it did when we're calling for it up here in the 120s. All right, so we'll go into the VIX next. So we hit that bottom here on the VIX. We talked about this over and over again. We talked about the potential of a a spring rather, which is basically just coming down to a key support. We have the horizontal yellow support right here. We came down, tested it. We put in a slightly lower low. We violated the ascending support here in blue. Once we got down there, essentially came down almost to the area that we said would basically invalidate us wanting to be in this trade. And then from there, the VIX has basically been ripping. Now, all it is doing really is, it was way above the 200s right here, and now it's way below the 200s right here. So it looks like we're getting that back test. Obviously, the 24% trade setup is what we had discussed, or 25%, whatever. It's about a 3-to-1 risk-reward ratio. And arguably, you could call this whatever you want. This is sort of like a trend reverting type of I guess asset class. I don't know what you would want to call this ticker. So it's not like something else where it's just going to go off and up and to the right forever. This basically just goes sideways inside of the range. It can hang out in certain portions of that range, but essentially just oscillates sideways forever. So it seems most likely we're going to get that return to the 200s, which gives us that like 25% move. If we break through that, maybe we come all the way back up to this descending resistance line. That gives us that 54% move. Either way, nice favorable risk reward ratio, like 3 and 6 to 1. Seems very likely too. We're leaving the bearish control zone. We have the hard buy signal, a bunch of green histograms. Now we're getting ready to, recapture the 8 and 21, potentially both cross them back to the upside. But what are we really doing? What are we really doing? I mean, we're just trading inside the range. This is the top of the range, bottom of the range, top of the range, bottom of the range, top of the range, bottom of the range. So what seems most likely? I mean, I'm sure you guys could figure it out on your own, but it seems most likely we come up here and test the top of the range one more time. So we'll see. That's what I'm guessing, predicting, expecting for now. All right, so yeah, we're just going to go through our traditional markets, and then we're going to spend a little extra time on a chart that I have prepared in advance. So Dow Jones next. So obviously we had a bear market here. We've been putting in a series of lower highs and lower lows. We took out this previous high right here. That's a big deal. Obviously makes the markets very bullish. We got above the 200 exponential and 200 simple. They both flipped blue. Now obviously we're seeing some signs of exhaustion here, some bearish divergence, higher highs on price action, lower highs on indicator oscillators, leaving the bearish control zone, bunch of red histograms. Everything's looking fairly bearish right here. 821 likely to cross. But the question is, when it retraces or pulls back, which seems likely and is in the process of doing now, when we get down to that 32,527 level, what happens? Is it going to hold that level? Is it going to bounce back up? That's the most important thing. So that's the real level. That's the pivot point in the market right now. And in my opinion, we've been in a long downtrend. We had a nice little relief rally push up here based on, all the expectations. But once we look at what has happened in previous markets when the Fed pivoted, once rates reached a maximum, and then we compare essentially that with, what happens in the actual price of stocks, we can get a much more clear idea as to, what we're looking for and expecting. The weekly had a nice bounce up here. Again, took out that previous high right there. What did we really do? We just bounced off the 200 exponential and simple. Bunch of green histograms, blue slope line into the bullish control zone. Decent bounce. A little W type W, double type W. No, not going to be able to speak today. A W type double bottom. Now it's not as clear. We broke down from it. But again, that could be the spring type situation where we use that to launch up higher. And the same way we broke through this right here, we potentially using a throw over, which is just the opposite of the spring, to basically propel us down lower. So again, more likely than not, in my opinion, we come down here, put in a low, then we put in a high, then we put in a lower low, then we put in, a higher high. So right now we kind of have an expanding range. So if we are going to keep doing what we're doing now, we're likely to come down here and put in a new low and then come back up and put in a slightly higher high, and maybe build like some kind of megaphone pattern. Now, obviously that doesn't have to happen, but there's potential there. And obviously we've seen some of these indexes in the past put in these types of megaphone patterns. If you need a specific example, here's a great one right here. So this is obviously exactly what we're talking about. We basically have a high and then a low, and then we come up here, basically retest the highs, go slightly higher, and then we come down here, put in a lower low, and then we come up and put in a new high after that. So we're just building this megaphone, and then we come down here, put in a new low again, and then we come down here, put in a new high again, and then finally we break out from this megaphone pattern, and then actually that really is just like the new top. So now we're down here, we came down, retested those previous highs from 2020, and now we're potentially starting to do like a little smaller version of the same thing. So maybe we break to the upside, go to new all-time highs, maybe we break down from here and start hitting our, target areas based on longer time frames. But right now the Dow Jones, is basically the strongest of the indexes and is giving us a much different picture. So here's the SPY, clearly just putting a series of lower highs and lower lows, backtesting the 200 exponential and simple. This is a very clear rejection. A rejection of the 200 exponential and simple, 821 getting ready for a bear cross, leaving the bearish control zone, hard sell signal coming down, all the histograms back down towards the zero line. Still have a blue slope for now, but seems likely after breaking down from and then backtesting the 236 that we're headed down here to retest the 382. And again, with a series of lower highs and lower lows, the most likely situation seems that we're going to come down here to the next level. So 382 was the initial target. We made it there perfectly. Next target would be the previous high, the high before the Rona dump in February of 2020. That seems most likely to me, and that's going to give us that low of 338 if we're going to go down from here. Now, if we break up from here, get back on top of the 200s, start looking for the measure move back to the upside or retest the previous all-time highs, we don't have to get bearish on it. Triple Qs are next. Again, series of lower highs and lower lows. Very weak. Didn't even make it up to the 200 exponential and simple. Already rolling back over. Seems likely this will be testing the lows very soon as well. And our next key area there, we made it to a 0.5 already. So, I mean, the next leg down on the Qs is much deeper. It's like 235 before it has like a new support. Obviously the previous lows would still be support, but all right, now we have the IWM, the old Russell 2000, lower highs, lower lows, made it up to the 200s, already getting rejected, 821. Key thing the Russell did here was basically put in a series of, double bottoms, essentially. Just retested the same area one time, two times, three times, never broke through it, which was different from the rest of the indices. So that is good. It showed some short-term strength there. But now if we come back down and retest this level again, it's just going to look like a descending triangle. And, likely we just hang out for a little bit, get through all the sell orders, and then break down to the next level, hit the measure move. So XLE melting down as expected. We talked about the double top. This is our atom, a very sharp top, or a blow-off top, however you want to call it. And then it's our Eve, a nice rounding top, that bubble butt. There it is right there. And coming back down to 200s, our target area. Obviously, I mean, we saw this coming, so no surprises there. But, obviously the key here is to watch the 200 exponential and simple moving averages. And then, of course, some kind of like ascending support or horizontal or something along those lines. But we're still looking for the back test of the descending channel and the 200 retest, somewhere around like 78 right here. Skip that one. Okay, so we're going to look at the Federal Reserve Fed funds rate. So this is the Fed funds effective rate going back to like 1950s till present. So obviously we have a pretty strong downtrend. Here we had a pretty strong uptrend. Here we have a pretty strong downtrend. We eventually had a series of lower highs and lower lows. We came down here to basically zero and couldn't get any lower. We put in that last lower high, again came back down to zero, couldn't get any lower, and then finally we took out that previous high. So we broke out. You guys know my target has been 5% on the Fed funds rate. It sounded insane when we were at zero, but suddenly, it doesn't sound as crazy. But obviously taking out that 2.5 level was important. Retesting basically the 5 level would be just retesting the next high after a confirmed breakout of a 40-year downtrend. So the white areas, obviously just regular, but the gray areas are recessions that took place. And then we're just going to kind of shift over here to a chart that I've showed you guys plenty of times. This is the 210. So let's just turn everything off and just start with the basics. So the 2-year yield is the blue. The 10 is the orange. So all the areas where the orange is in the background here is basically the spread between the 2 and the 10. So we can see when they're correctly postured, which would be higher interest rate on longer duration, it's orange. And then when the blue gets above it, that's the yield curve inversion, which is obviously what everybody's paying attention to. Some people like the 3 month, some people like the whatever. We just use the 210 because that has that's always been the gold standard of yield inversion. So 210 it is. So we're on the monthly chart right here. Obviously we have the TJD master on here. So we can see whenever the 821 cross bearish, that's basically the downtrend. Whenever we're below the 200s, we're in a downtrend, which has been going back to like the 80s, the last like 30, 40 years. So we finally have broken above those levels. We broke above them right here. We kind of flipped them both bullish and then we immediately melted down. So maybe the same thing's about to happen now, but there's no denying that we have broken through this descending resistance here in white. And whenever we have a technical breakout, we would then expect to start retesting key levels. So the first key level when we had the technical breakout was that previous 3+% yield. And now here, keep in mind, this is the 210 now, not the Fed, effective funds rate. So 5.1 would be the next level here. We're at like 4.36 right now on the 2. We're at 3.56 on the 10. So the yield curve is inverted, and it's basically the most inverted it has ever been on the 210. Because we have essentially an inversion of like 80 basis points roughly. I mean, and by roughly, I mean exactly. So that being said, we have a massive yield inversion, a breakout of a technical downtrend. What is all the other junk on this chart? So the white areas, the white vertical lines, those are the beginnings of recessions. And keep in mind, they're always called in hindsight. So here we have a recession, and then we're going to look at the relative position of the recession in relation to the downturn, aka, the bear trend of the 8 and 21 on a monthly. So the recession happens right around the cross, and then we see, you know, pretty deep downturn after that. We're going to just go over here. We see the recession happens slightly after the cross, and then again we go into a deep downtrend right there. And then again we see a recession here in 2007, followed by deep downtrend of the 8 and 21. I'm sure you guys are sensing a pattern right now. You know, the recession is at the beginning, not always beforehand, not always right afterwards, but it's always during, you know, and followed by the majority of or deep downturns. Now, obviously, this situation we had here with the Rona was a little different because we didn't see as much follow through. It's much more violent of a move because people were scared, but it was also a much more violent recovery. All right, so that being said, that's our white, that's recessions. You can see our little key here. You guys appreciate, hopefully, how much work I put into this chart. And I got to give it to TradingView for their like cool little tools because it didn't take me that long. No offense, guys. You're worth the time, though. So Fed pivot is next. So when did the Fed actually pivot? That seems like an important thing, right? Everybody is got a hard on nonstop right now for the Fed pivot. It's all we ever hear about. Oh, the Fed pivot, the Fed pivot, Fed pivot, Fed pivot. Okay, so what does the Fed pivot mean? Everybody's like, well, that's it. The Fed pivots and then easy money and just everything goes to the moon, right? Okay, well then if that's true, if that is a true statement, the Fed pivots and then assets go up in price. Just keep it simple. We're just a bunch of apes trying to get other apes money. Okay? That's what we're trying to do. So how do we get that money? By buying assets when they're low and selling them when they're high. Boom. Easy. So for us apes out here that just want to keep it simple and make money, if that's true, if the Fed pivot then follows by higher asset prices, that's awesome. That's super simple. And we can let's just slap it on a chart and figure it out. So let's see our Fed pivot right here. Obviously came a little before the recession, a little before the downtrend cross. Our Fed pivot right here happens right before the downturn cross, right before the recession. Our Fed pivot happens right here, right before the cross, right before the recession. Okay, that's so hang on. I'm starting to sense a trend here. Fed pivot, downtrend, recession. Okay, so the Fed pivots, then the yields get crushed after that. Obviously, that makes sense. And then we go down into a recession, you know, either a couple months afterwards, whatever. Okay, so that's simple. So the Fed's going to pivot, then we're going to have a recession, and then somewhere along the way from there, we could figure out how to make money from it. Okay, so let's get ready. Let's get ready right now together, and then that way we're prepared. Okay, so we got the recession down, we got the Fed pivot down. So what is the TC top and TC bottom? This is time cycle analysis, okay? It's pure science. It's not speculative whatsoever. It's literally the most factual way you can draw lines on a chart. And that, my friends, is sarcasm. Okay, so time cycle analysis is basically just taking your time cycle tool and you just put a line somewhere important and then you put another line somewhere else important, okay? And then you just see if magically those lines happen to line up with other important stuff on the chart. So it's basically like the equivalence of like, you know, reading your horoscope for like technical analysis. All right, so it's obviously BS, so we might as well not even do it. But, I mean, since we're here right now and we're playing with all these other funny things, we'll go ahead and just do that. So here we have basically our top of the markets. So that's time cycle analysis top. So we draw that one in here. You see a little dot. That means that's where I started it at. That was the absolute peak from, you know, 89 basically. That Paul Volcker legendary time. And then here we have our next one. So this is our next data point. And then once we put these two in place, it's going to just slap all the rest on here. So that's exactly what happened. So that is our 94. And then we'll just see, does it look like it predicts into the future potential next tops? So we have a top right here. We have a top right here. And then this is the time cycle analysis tool, either working really, really well or just complete garbage. And we can just tell right away. Immediately, we could tell. It's complete garbage, obviously. Because we put these first two tops. And then this, well, actually, that's coincidence. That one also was a top. And then the next, oh, okay. So, all right. So we put two lines on here. And then it drew out the other lines for us and randomly picked the tops. Exactly. Okay, whatever. Coincidence. It's not a big deal. The next one, though. The next one was all the way down here at the bottom. So, boom, there it is. It obviously does not work at all. It does not work at all because the next one, it said the top was actually at the bottom. And then, oh my gosh. But then the one after that, it got. So it was worth a shot. It missed one right here. But what was the difference there? Well, this was basically the GFC collapse. And then the GFC led us down to that low down here in like 2012 to late 2013 or mid 2013 levels. Well, we know also that if we look at the DXY chart, should we jump over there really quick and compare it? All right, I'm not even gonna mess with it. But we know with the DXY chart that the same type of thing that's happening with yields right here, where we should have had a top in that chart, we actually just put in a super deep bottom. As where in the previous cycle before that, like the 2000 top, essentially, we came down, put in a bottom around that same time, then put in a top again. Then we should have come down and put in a bottom around here and then come up and put in a top again. But we didn't. We did a double dose of downtrend. The double D's, okay? Everybody likes double D's, but not this kind, okay? Plus, they're also, athletic-wise, they're just not really, it's not the best choice. So that being said, this right here, call it an anomaly, whatever we want to call it. We know that the same exact thing happened in the dollar, very similar situation. Obviously, bonds and yields are, inverse. So we saw the same thing in bond market as well. All right, so that being said, we have 2 times where we randomly got lucky 100%. We have 1 anomaly, and then we have a 3rd time where we randomly got lucky 100%. So we'll look at this later. That's our projection into the future, the one that hasn't happened yet. All right, so we got the recession, we got the Fed pivot, we got the time cycle top, we've got the sarcasm. Oh, that one's not on here. I'm sorry. We got the TC bottom is next. Okay, that's just time cycle bottom. That's just me like drawing random green lines on a chart and seeing if it works. Okay, so 1 time, yes, I drew that one. 2 times, yes. Did I fudge the data here? I don't know. 3 times, okay, yep, and then 4 times, all right, so we nailed it. But this little guy, I mean, that was close enough. I think we could count it. It's not perfect. If you were like, did it pick the exact bottom? Nope, it did not. But it's worth paying attention to. Okay. So we went through the key. We went through the sarcasm. We got all that stuff down here. We're ready to have a little fun now. Because now we get to really speculate. I know you're like, this is crazy. We're using time cycle analysis tools and already speculating. I know, right? So here we have projected out into the future, essentially, what is likely to happen, okay? And this is based off a couple of things because obviously we don't know when the Fed pivot is going to be. So for that, we're going to jump over here and we take a look at what the Fed says it's going to do. And you're like, but the Fed, they lie about everything and they're stupid and they're wrong and they don't know anything. I totally agree. But this is their most recent FOMC summary of economic projections for the Fed funds rate median, okay? So they're saying in 2023, now you can't have data points where it's like January, February, March, April, May. No. The Fed's like, okay, look, we'll give you 1 data point per year. That's it. So say it's January, say it's middle of the year, whatever. But they're saying 2023, 4.6%. So that's straight from the horse's mouth. So I went ahead and drew that in here. In January, maybe it needs to be out here, in the middle of the year. I don't know. We've heard what's going on and what the market, what the talking heads think is going to happen. Obviously, it's priced in that we're about to get a 50 basis point hike. And then in January, we get probably, nothing in January. And then in February, we get a 25 basis point hike or nothing. And then it's over. So maybe it goes right here. Maybe it goes right here. Maybe it should be 6 months out into the future. But this is the actual data point we could use. It's a projection. So it's dotted lines. That's not on the key. But if there's any questions, just remind me. All right. So we have the dotted projection for the Fed pivot. So about to happen. Okay, so that seems important. Right after the Fed pivot happens every time, what happens? The 8 and 21 bear cross back to the downside on the monthly shortly afterwards. And then we enter into a recession. Like we did right here in 2001. Like we did right here in 2007. And then like we did right here in 2020. And coincidentally, the one outlier right here, for some reason we didn't go into a recession. That's so weird. While, the Fed funds rate was at 0. Of course not. Free money helps stop recessions. Write that down. So anyway, looking at the Fed pivot right here, that's our potential Fed pivot before the cross. And then that would essentially be the top. And this was just an anomaly breakout. We're not going to see continuation. Or we're going to break down right here, come back down, retest these levels, and then go higher. But time cycle top tells us actually that we're actually not going to top until somewhere around like February 2024. So according to the time cycle top, which was right a lot of times, but didn't pick up this outlier, we still have some time before the top. So obviously that's a little speculative. And then you'll see here some weird stuff starts to happen because I actually just used these time cycle lines the way they're supposed to on the chart. Oh wait, do we? Yeah, okay. They're different like tops and bottoms, obviously. Here we have a top, here we have a top, here we have a top. But actually, we just have one bottom in between two tops, of course. We don't really have a bottom right here because it's not really like, I mean, you could say that was the bottom, but it's not actually a lower low. We know we're in a downtrend in hindsight. So obviously we know that wasn't a bottom. But, you know, it was an internal bottom, but it wasn't actually a bottom. So that one gets skipped. So we go from this one to this one, and then of course from this one to this one, and then of course from this one to this one. And then the next projected bottom is in 2029. So again, very, very speculative, very far out into the future. And obviously nobody knows what's going to happen between now and 2029. But if it's saying that's the next bottom we're going to get, I mean, and the top we're going to get is right before that, and then we're going to get a bottom and a short top after that, it seems like we're probably going to get one of these because there's no way we can have a bottom and a top right afterwards with a normal cycle. It's not possible. Okay, so what the hell is going on and why is this working out like this? Well, it's because they don't line up perfectly. There creates times where there's like a massive gap, like basically between this bottom right here and this top, there's a pretty nice gap between them. As we're here, there's a bottom top, and that's obviously a false, and then we continue to the upside. So if we're getting another, you know, signal like that, basically, what that's telling us is the potential is showing us, and again, it doesn't have to happen, but the potential is showing us actually we're setting up for another one of these. Okay, see, like the difference being, this is our regular cycle down, then cycle back up, then cycle down, then cycle back up. Then this should have been a cycle down and then cycle back up, but instead it just cycles down twice. So then we have a nice cycle back up, then a cycle down, then a cycle back up. And this is telling us we're about to have a cycle down, and then instead of having another cycle back up, we're going to have another cycle back down. So that tells us rates likely going to go back down, maybe put in an inverted head and shoulders, something like that. But it says basically like everybody calling for the end of the system and the end of the world and the crash and like, you know, all that stuff. It's actually telling us that's not likely to happen. Likely, actually, we're going to get a double dose of down. So really, what is the Federal Reserve doing, assuming they have a plan and they're executing it flawlessly? You know, what is happening right now? I mean, the Federal Reserve is basically setting us up to where they can cut rates again and extend out this cycle longer. So that's what it seems likely to me. Now, when we say we do go a little higher here out into next year, and then we start to come back down, you know, and it takes some time, obviously, for the rates to come down. You know, maybe in 2026, something like that, we're back down here at like 2%. Well, what about, you know, let's check. Hey, we got some data. Where does the Fed think we're going to be at in the future? Well, here's 2025. The Fed thinks we're going to be at 2.9%. 2024, they think we're going to be at 3.9%. So 3.9, then 2.9. So we're at like 4.6. So let's go back over here and have a look. And you're like, what is your point? We'll get there eventually if you last. Hopefully we don't run out of time. So 2024, what did we say? 3.9. So they're saying it's actually going to stay high for a while here. And then, you know, 2025, then we'll be back down here at about 2.9. So if we were to just draw onto this chart, basically what the Fed says is going to happen, you know, according to this, we're going to go slightly higher up. Or no, wait, I'm sorry. I went the wrong way. We're going to go just start going down from here. That's going to have been our top. We're going to continue down here. We're going to be down around 2.9% in 2025. So we should have been, so it needs to be a little quicker than that. But I mean, I'm sure you guys are getting the point here. This is not, you know, according to the Fed and what we see here, this is not going to be one of those spike tops because we need to intersect with 2024 at 3.9. So the first line needs to go like that. And then we need to intersect with 2.9 in 2025. So something like that. So it's going to look still, you know, I guess a couple of those looked like that. So that's what we're looking forward to from the Fed. And then theoretically, obviously, you know, after that, they'll get it down to 2%, something like that. But what is that? I mean, if that's correct, if the Fed's right, if they're, you know, correct about this, this is just a back test of the breakout. And then really what ends up happening after that? Now, this is where we get into the really speculative stuff. But do we end up with one of these where actually it looks like we should be getting a bottom right here, and then that turns out to be a top, and then we come back down, you know, lower from there, and we get another one of those? I mean, we'll have to see, obviously, but it's worth paying attention to. But now, all the speculative stuff aside, we know what the Fed is saying they're going to do. You know, we all have our opinion about what's going to actually happen, if there's potentially going to be a recession, when is that recession going to be, etc. Well, what happened here? We know, obviously, what happened here. The Fed pivots in yellow, we get a recession shortly after. The Fed pivots in yellow, we get a recession shortly after. Fed pivots in yellow, recession shortly after. Fed pivots in yellow. Obviously, the Fed doesn't have to pivot here because we're at 0. Fed pivots in yellow, recession shortly after. So we don't know exactly where this is going to happen, but if the Fed pivots in yellow right here, you know, it seems like we're probably going to get a recession shortly after, somewhere around there. You know, just roughly by the distance in between the pivot and the recession. So this is telling us, hey, maybe we're going to have a recession somewhere around like the end of 2023, beginning of 2024. Okay, so no more speculation. So all this trash right here that we put on this chart that we just went through has all been transferred over now to how we could look at this in comparison to equities. So I have created this SPX chart, which is just the S&P 500, you know, going back to the Stone Age when dinosaurs were around, aka 1872. Ooh, dissed old people, got him. Got him. All right, so we got the stuff and the things as well. We have the time cycle bottoms on here in green. We have the time cycle tops here on red. Okay, so just right off the bat, looking at those, you know, this thing is like straight up and to the right, with the exception of a couple specific times when, you know, obviously there is some clear like resistance. Like it took a while to get through that right there. Same situation right here. Took a while to get through this right here. So some of the stuff is a little less reliable, but I didn't even bother putting all that trash in there because we can't compare it to the other stuff because the other chart doesn't go back far enough. But let's just look right here. So recession, you know, and then we see continuation down to the 200. Recession, continuation down and through the 200. Recession, deep little dive to the 200, and then new highs. So just because the recession comes doesn't mean we can't get new highs afterwards. Recession right here, retest the breakout. So the whole time these recessions are happening and the Fed is pivoting and all this stuff's happening, actually like the TA is lining up like perfect with it. Key support levels, resistance levels, you know, momentum from the indicator oscillators. So we're starting to build a picture of some pretty awesome confluence. You know, again, we see same thing, 1990, recession, lower lows, recession, lower lows. Wait a minute, am I getting at something here? Am I tricking you guys by building a case live in front of you as if we're going to convict these markets? I am. That's exactly what I'm doing. Okay. Every time we see one of these recessions, it's immediately followed by a lower low or sometimes a deep low afterwards, depending on if we're at a key resistance or if we're just in a parabolic uptrend. But either way, the market always goes on to make lower lows. Here we see recession, new low. That was the Rona dump right there. And then here we have projected out into the future. You know, we don't know when it's going to happen. You know, we had talked about some potential times, you know, whatever. So at some point in time in the near future, which a lot of stuff could happen between then, you know, all of 2023, the Fed pivots sometime in 2023, 2024 maybe. And then what? We get a recession sometime in 2023 or 2024. So maybe this needs to be here. We don't know. Somewhere in this area, though, we're going to get a recession. And we know what happens after we get a recession. We get lower lows. So maybe we go on to put in new highs, and then we get a recession, we go to lower lows. But regardless, we should expect lower lows going on to the future based on every single time. Now, sometimes a recession happens, and then the recession wouldn't have even been announced yet, technically, because they do it in hindsight before the lower lows. So it's worth paying attention to that as well. But obviously, we can use that as a tool. All right, so we have our Fed pivot, obviously going out into the future, potential Fed pivot. We don't know when it's going to happen. Is it going to be, you know, January of 2023? Is it going to be mid-year? So let's just put it right here, and we'll just say the Fed pivot's going to be January 2023. You know, literally the next month from now, immediately. The Fed's done. So then we say the recession's going to be, you know, roughly this distance, you know, from there. So, you know, we'll just say roughly end of 2023, the recession is official, etc. Now let's look at our time cycle tops and bottoms right here. So obviously I didn't go back crazy beyond the parts where we could actually see with the yields. So here we have a bottom, nice little run. I'm sorry. Yeah. Bottom, nice little run. And then this should have been a top, but then we just run. So that didn't make any difference at all in that 1991. And then we see bottom, and then we say it says top, and then we go on a massive run. So obviously that wasn't really that useful. So the rate time cycle analysis is a lot less useful on here until we get to about 2000. And then all of a sudden it starts working pretty freaking good. So the time cycle top right here in 2000, time cycle bottom here in 2002. The top is, right around here in 2006, 2007. Then we get a bottom shortly after. We don't get the confirmation of the bottom from time cycle until, much, much later, obviously. Then it says top. Then we break out and run. It's not that great. Top, a little low, run up to new highs. That's it. So that doesn't work nearly as effective. So in my opinion, the most important thing to watch is and pay attention to is the correlation between the actual Fed pivot, the recession, and what likely comes afterwards. So here we saw once the Fed pivot took place, let me just turn this off right here. Once that Fed pivot took place right here in yellow at the peak basically of the markets, that was 2000. All right. So we know that was, the tech boom. We see the meltdown take place. And the arrow is the distance from the top and the Fed pivot to the bottom, like macro bottom. And then I just like lifted it up and then just put it right there so we could see, what kind of situation took place. Same thing right here. This one, the top was a little closer to when the actual recession happened, well after the Fed pivot, and then that was our bottom. So then I did the same thing right here for the Rona top right here. That was 2008. We basically just melted down in like a month, and then that was it. The bottom is in, and then we rode from there. So this is what we have had taken place right here. So this is basically it from the top to, what bottom we already have. Now, we don't know if that's going to be the macro bottom. We're trying to fight to get it back. Looks like it's starting to get rejected based on the daily and monthly charts as well, which would say, obviously, we would need to extend this out further down here, whatever. But regardless, we know that if the recession is coming, we still have more pain ahead. So if the Fed does pivot right here, we know there every other time, at least in the relevant recent history, after the recession happens, which is after the Fed pivot, prices go lower. So in my opinion, based on this wonky set of random stuff here that is in no way, proof of anything, seems like there's a good possibility. Actually, we are going to come back down here and retest the 200 exponential and simple. And, we actually are going to do that somewhere around here after we have that recession, which means that probably we put in the peak. Now, could we come up here, put in a new high, and then the recession hits, and then we just come down even deeper? We definitely could. I don't think it matters where we break down from for here. If we go down here and we hit the 200s and we go into a recession and we see that, we're talking about like a 40% drop from where we're at right now. The difference if we run up here to new all-time highs and then we drop down to the 200 exponential, we're talking about like a 6 to 49% drop. So I don't really give a damn about if we go to new all-time highs first or not. What I'm focused on is avoiding that 40% drop. And the same way we see the 821 bear cross on here before those big drops took place, before or around when the recession happened, we don't technically have a recession right here. Maybe they will come out later and they will say, actually, yeah, we did go into recession right around then, right around the same time when the bear cross happens on the 8 and 21. And then our recession happened before the Fed pivot, which hasn't happened previously ever. So maybe we had a little bonus recession right here. And then it's like, oh, great job. You guys did it. Congratulations on the recession. It's like, oh, thanks so much. Congratulations. And then we get another one right after this. Now, has that ever happened before? Have we ever had, multiple recessions in a row? Yeah, right here with the Paul Volcker moment, a couple of years apart. We had previously within a couple of years, but never like this where we, well, I guess arguably they're about the same distance apart. So I don't think it's crazy to think that, we got a bonus recession. Oh, sorry, wrong one. Then we got a bonus recession back then. And then we prolonged up here, got a little rip to the Fed pivot. And then actually we're going to get our, the real recession, the one that we were going to get regardless. We just kind of prolonged it. So we end up with a little 1-2 recession punch. So that's what I'm looking at. I'm looking at the potential here and the likelihood that essentially we're going to come back down here, probably retest crazy low lows if all this plays out in this crazy wonky situation. So that's it. We looked at the thing. We did the stuff. We drawed the lines and then made the conclusions. Or maybe we made the lines and drawed the conclusions. But either way. All right, so DXY. So we kind of talked about it before. I didn't want to switch over to it and just get all crazy. But if we look at the DXY and what's been taking place on this bad boy, that's our 2000 peak right there. And then here's 2008 down here. So again, we see the previous peaks had lined up. We have a peak, we have a trough, we have a peak, we have a trough. This should have been a peak up here in 2008. Because, you know, obviously we saw the assets from 2000 and then they recover back and put in a high in 2008. And then they sell back off and then they go to highs after that. We don't see that happen on the dollar. So we see the correlation between the DXY, the dollar index, and rates played out beautifully in all those situations. And again, we see the very same things when we look at this chart. It's a little crazy, but, you know, a top, a lower high right here, a back test of the breakout. Once we broke through that resistance red, or arguably dotted orange line right here, we back tested it a couple years later, and then we continued putting in a higher low and then breaking out to the upside. We broke through. Now here we have, depending on what time frame you're looking at this, you know, or if you draw it from the tops or the bottoms, if we put the support line here on the bottom in white, and then we connect to the top point in white right there as well, with the exception of this crazy anomaly like spike out, you know, which is what we're at right now. You know, we basically have broken out, because we have multiple support points right here. We got some resistance right here. We made it through the resistance. And now what are we doing? Oops. Ruining the chart forever. We're basically just back testing the breakout point. And that's where we're at right now. So is it possible we don't actually like confirm the breakout? We break down from here and then that's it. And the dollar just gets weak and it goes to zero like everybody says. Sure, it's definitely possible. Or, you know, we broke out, we're back testing it, and then potentially going to go higher. We don't know which one's going to happen, obviously, but build a strong case for, you know, potential rates going much higher. Also built a strong case for rates to come back down and then going back higher, but just not ever getting back down to that zero level again. All right, so Tesla at the lows, not looking so hot right here. Building up multiple drives of bullish divergence though. Not necessarily on this last little push right here, but it wouldn't be crazy to think we come down here and slightly go lower. But you guys know, if you watch that breakdown Tesla video that I did, that actually what I'm looking at right now is the potential for a counter trend move. We're inside this channel, melting down, and basically came back up to back test resistance. That 236, we have the blue 236 here with the heart line. That's our first target for a potential trade setup. We have top of the channel right here. The measure move back to the top of the range. Could we break down from here and get a big nasty fall? Sure, definitely could. But as long as we're trading inside a range, seems more likely than not that we're going to continue inside that range. I wouldn't rule out the possibility of a breakdown here, new low, and then we get the run that we're looking for. So 23% upside, 3-to-1 stop loss, and then we got a 50% upside. And you can go watch that Tesla video if you care. All right, Microsoft. So the trade setup has all but played out. I mean, we're a couple percentage away from a 200 exponential and simple. We're holding the 382 for now. Doesn't seem crazy that we could get one more push up here, like 265, but that may just be the front run, and that's it. We have descending resistance. Every time in the past we've sold into resistance or into the 200s, it's worked out quite well. And obviously the last trade setup was off the 382. This one was off the 0.5. Each time we've put in a lower high and lower low. So regardless of if this is played out completely or not, whether we go slightly higher or not, we know likely after that, new lows. All right, Apple. So Apple back down here at that yellow line, just testing it, forever testing that yellow line. This was our 2021 peak right here, and then it's acted as support. Support, kind of broke through it a little bit, reclaimed it. Support, kind of broke through it a little bit, reclaimed it. And now here we are just hanging out at it. Seems very likely we're getting ready for our next leg down. Obviously, we took the short on Apple way back here when everybody else was super bullish and expecting new all-time highs on anything. And we absolutely nailed it, 17%, locked in those gains. We had the crazy bounce after that. We went slightly lower and then had a crazy bounce after that. And obviously, the trailing stop for this position, for the remainder of the position, for the big leg down, was getting back above the 200 exponential and simple. So we got rejected at that level and got rejected a bunch more times at that level. So obviously we're still in the remainder of the position with a target down here of 116, somewhere around 115, 116, which is just the 382. So we peaked out right here. We retested the 236, put in another lower high, a series of lower highs. Haven't quite put in a lower low yet. So we have this little ascending support right here. But it seems more likely than not we're going to get pinched in this little triangle between the moving averages and that ascending support line. And then probability says bear market below the 200 exponential and simple. We're going to just hit this a bunch of times, chew through it, and then we'll break down to the 382. We'll get our nut, that 31%, and then we'll close the Apple trade. Or we're just completely wrong and it just goes to the moon and I'm done. And I'll delete this video and just pretend like it never happened. I'm just kidding. I've never deleted any videos. Google on the daily. Google McDougal. The old googly eyes. So obviously bear market. Retested 200 exponential and simple. Broke down to new lows. Back tested the 382. Melting back down once again. Looks like it's headed back to a 0.5. We already hit the 0.5 once. So if we do come down to it, likely we get that measure move. All the measure move is just a repeat of the first leg here. So maybe it doesn't happen. Maybe it's not perfect. Maybe the exact move happens. Maybe it already happened and that was just, you know, if we draw it up here and go from the top maybe. It doesn't really matter. The point is lower highs and lower lows. Back testing. Every time we break down from support, back test it. Break down to the next support level. Break down to the next support level. Back test it. Seems likely we're going to come back down here to the 618. So slinky theory, 2 steps down, 1 step back, 2 steps down, 1 step back, 2 steps down. So 618 target on the Googs. Magma. Meta is next. So we got the 821 bull cross on Meta, back testing those key Fibonacci supports. What are we really doing though? Did we just come up here to close the gap? I mean, probably. You know, probably. From 88 to, essentially 125. Pretty nice move to the upside. Kind of front ran our fib back here. We'll see what happens. If we get back above this level, I think we could come up to 236. It's not my base case, obviously. I think more likely we come down to 83, but we'll see. It's possible everybody just got super bearish on Meta because of the metaverse and was just like, what a trash idea. This company's going to zero and like just price all in the bearish news. Maybe. Amazon's next. Amazon is at the lows. And if Amazon's like a bellwether stock or, whatever you want to call it. I mean, the fact that it's literally at like the lowest low it's been at in a long, long time. I mean, we're back down to 2018 levels. Basically, double bottom, a complete round trip. Complete round trip. This is our bottom right here. We went to new all-time highs, and then we completely round trip the move. So is that going to be the support, and then we magically just go higher? I mean, I guess it's possible, but to tell you the truth, it makes me think like, hey, maybe we're not looking at the best fib, or maybe we should start considering the possibility that we're in some kind of like macro bigger pattern. Good thing we already did that. So here is our macro 236 in orange, or we have a macro 236 in green. Either one of those is worth paying attention to. The orange one takes us down to $63. The green one takes us down to $39. And I know what you're thinking. We'll never get down to 60 whatever dollars. Maybe. Maybe we will. So that's my target, 60 something bucks on Amazon. Whoa, that's just way too obnoxious. There we go. All right. Let's look at some crypto. Crypto Connect. All right, so not looking great here, guys. We've talked about the potential weakness in crypto, and obviously that most of it's a scam. And typically coming off a fresh scam, before you could scam more people, you gotta like let the excitement die down. And as long as Sam Bankman-Fried is going like full retard, doing all these interviews and stuff, and trying to be like, he's trying to go like, what's that, Simple Jack? I mean, he's trying to go full Simple Jack. He's like, no, I should have paid more attention. I got complacent and I was cocky. Like, what are you talking about, dude? How did you go from the smartest man alive to some like you went from idiot savant to idiot? Get out of here, man. He needs to go to prison in like 7 years, like Elizabeth Holmes did, or will potentially, maybe not. So anyway. I mean, it's hard for me to think that crypto is just going to get out of this like ridiculous downtrend while we're just constantly getting plagued by SBF news and all this BS. And these little kids are going to start ratting on each other and selling each other up the river. So we'll see what happens. But the 821 bull cross happened right here, and it's not looking great. Obviously, some weakness afterwards, and it's looking like we're getting ready to break back down and lose the 821 cross. We do have blue slope line. We're at the zero line. But now we're getting a hard sell signal. So we'll see what happens. Next couple of days are going to be crucial. If we break down from that 16,835 level, you know, we're going to start retesting some of these other key areas. So I mean, I find it hard to believe that that was like the big push for Bitcoin. I mean, I guess nobody likes crypto anymore. That was it. We had a massive sell-off, just a complete meltdown, and then we bounced back 12.5%. So it's obvious there's no buyers, obviously. So we made it not even to the 382. We were talking about the potential if this top of the one held right here at the 236, which it did, that there was potential to come up here at least to the 382, maybe to the 0.5, you know, somewhere up in that level. And we just have not been able to do it. Doesn't mean we can't. Maybe we come back down here one more time and then we get a leg up, but I don't know. It does not look particularly good. Not to me. And if we break down to the 4 hour right here, this looks pretty terrible. I mean, essentially put in the low, a leg up, support, a leg up, support above the previous level. That's good. And then we should have had a leg up right here, and we got rejected pretty damn hard by the 200 exponential on the 4 hour. 200 simples down here. You know, you guys can probably look at this and guess what I'm about to say right now. You know, if we're just like acting in this, we're probably just going to continue in this. You know, we basically have now this little channel that we've been trading inside of. So we broke into it right here, you know, bounce around inside this channel a couple times, and it looks like we're headed down here to the bottom of the channel. And what else is at that channel? Oh, the 236 in green. Oh, the 200 simple on pink right here. So again, I would expect we're about to come back down here to 16,763. And then while I'm not particularly bullish on crypto, the knife is like through the floor. It's all red histograms about at the 0 mark. I mean, it seems like we're probably going to at least get a temporary bounce. Now, what happens after that bounce takes place? I don't know. I don't know if it's just going to be a little temporary bounce and we come back up to the top of the range. I don't know if it's going to be a back test to the heart line and then we break down from there. I don't know if we're going to new highs. You know, obviously, the best part about a key support or resistance, which here it was clearly resistance, here it was clearly support, and now we're about to retest that support again. That's a pivot point in the market. You know, maybe not for a potential macro move where this is like the lowest low we ever have and then we go higher. But I mean, it could happen. This is what it looks like. You break down into a bear market on the 4 hour right here. We're in a 4 hour bear market. That makes sense. And now we're trying to get back into a 4 hour bull market. So maybe we come back down here, retest this again, and then we actually, you know, start into our actual bull market from there. Now, I don't know if that's going to happen. I don't want to get like overly bullish. You know, it kind of looks like we're breaking down from an ascending channel. So we'll see what happens. We don't want to get overly bullish or overly bearish on this. But I mean, if we manipulate it a little bit and get tricky, we go off like the 4 hour closes, you know, maybe this thing's still got a shot. Something like that. Kind of looks like we're breaking down from it, but maybe we come down here, find support, reclaim the channel, go higher. But, you know, we have a bunch of stuff lining up right here. So there's some potential at least, but it does look like we're kind of breaking down from this. So, you know, theoretically, if this breakdown happens, and, you know, this might happen over the next couple hours. It might happen before you watch the video. It might happen while we're filming the rest of the video. The measure move breakdown would be essentially the top of the channel to the bottom of the channel. And it would take us roughly back down to like 16.2. But then is that a bottom? Is that gonna happen later? You know, do we get a scenario where essentially we do something like this? Actually, we break down here, we come back up and retest the heart line, then we come back down here again, and then, you know, maybe we break through it, back test there, and then, oh, I double clicked and messed the whole thing up. Boop. Something like that. A 1, a 2, a 3, a 4, a 5. I mean, it doesn't have to be exactly that. It doesn't have to be Elliott wave or whatever, but, you know, just theoretically something like support, resistance, breakdown from support, back test as resistance, and then measure move completes. And then from there, it's still a higher low. Maybe we could go higher. Maybe we stay above the 200 simple as it kind of curves up here. I don't know. There's some potential here. It's tough to tell what's going to happen, you know, going into the future, especially on shorter time frames right now. But we're clearly in a weak bear market on the 4 hour. We're trying to reclaim the bull market. So if we get back above 17.3, I'm going to be pretty freaking bullish on the 4 hour. If we break down below 16,772, so basically if we leave the channel in one way or the other, you know, that's where my bias immediately goes. So if we just switch out here now to the daily and we just look at what's taking place now, you know, we know, okay, so if we break out of this channel and we start continuing up in the ascending channel right here, well, our next target's probably going to be initially the 382, but you know, we might have some legs and get up here to 0.5, and that could put us at like 18.2. And then obviously if we break down, you know, the next key level to watch is, hey, if we take out that previous swing low right here, 16.2, that's going to look bad. It's going to look real bad if we take out 16.2. And it just so happens that, you know, basically everything lines up right around those two levels. So we see a lot of confluence to the upside. We see a lot of confluence to the downside. And, you know, however price develops will be handled to act accordingly. So any signs of bullishness Bitcoin was displaying on the daily starting to fade. Doesn't mean that over the next, you know, whatever, 22 hours, we don't come down here, find support, bounce back up here, get back on top of the, you know, 8 and 21, have a bull cross on the 4 hour, and then start moving up here on the daily. And actually it's like, oh, this was the retest down. The bulls stepped in and bought it up, and the bears didn't do anything. And then we broke out of the channel, and then we can start looking at decent, like, you know, high double digits targets, you know, 18, 19 to $20,000. All right, Ethereum, pretty much doing the exact same thing. The only difference being that we put in a macro low here and we didn't right here. Whoop-de-doo. Total market cap on the weekly, hanging out at the lows. Not good. Broke down below 200 exponential and simple. I mean, it's very close to confirming the 200 simple into a, bear market. So get ready for that. Bitcoin dominance on the weekly. You know, this is crazy because this is where we got like the lowest Bitcoin dominance from like the spike high of 2019. And we're just hanging out at that levels right here. So at some point in time, we're going to break to new lows and altcoins are just going to rip compared to Bitcoin. Or, you know, we're going to bottom and then move back up and Bitcoin's going to rip compared to altcoins, which could mean up or down. Who knows? Bitcoin dominance minus the stable coins. We're back on top of the 821, fighting to see if this is going to be a bull cross and move up or a bear cross and move down. And all this is saying, if we take stable coins out of the mix, do people want Bitcoin or shitcoins? Chili's headed down here to that low, and we have a, you know, megaphone pattern. We were fighting to reclaim the 200s. We got above them, lost it. Now it looks like we're going to get some cheese fries down here at about 13 cents, which is our target. And then we have the potential trade setup of, you know, the week. Who knows? If we get down here to the 236, it's not crazy to think we hit the 0. We push all the way up here to the 618. We come down through the 0.5, through the 382, all the way down to the 28, all the way down to the 236. And then push back up to the 382, push back up to the 0.5, retest the 618, maybe go even higher to the 786. Who knows? But regardless, we know, hey, we can take a shot right here at the 236. You know, look for some kind of bottoming pattern at the bottom of this megaphone with like a 7% super tight, like a Toiga stop loss and 124% upside. We don't have to get greedy though. Maybe we could take some profits at 36%, lock in a little more at 75%, you know, go big at 126. But regardless, I mean, we're talking about like, you know, 5 to 20x risk reward ratios. So it's worth a shot. It's worth a shot. You're like, I don't like chili. It gives me gas. Well, then don't buy the chili cheese stocks. Jesus. Solana is next. So we're at the lows. This thing's melting down. I mean, look, guys. Solana is like directly tied to FTX and all the stuff going on. So I would just right now stay away from stuff like that. You know, obviously FTX token, Solana, anything else that's directly linked. I would be careful with stuff like Binance. You know, I wouldn't invest in Tether either. I mean, when I say invest, I mean like put any money ever in Tether. Link is next. So this thing's got some potential here. We're basically range bound, you know, just oscillating at these levels. Is this redistribution? Is this reaccumulation? The key is getting above the 200 simple, getting above the 200 exponential. If we start closing back above the 200 simple again, it's going to look like we're pushing up to the 236, probably to retest that $9 level, and then the potential for the trade setups here. So, but if we can't get above here and stay above here, there's no real hope. And honestly, I don't think it's going to happen. I think we're going back down here. So we shall see. But I mean, the truth is, none of this stuff really matters. All that really matters is what Bitcoin does and what stonks do. Avalanche, melting down here, getting ready to retest the lows. Just looks rough. Crypto looks rough right now, guys. Polkadot is literally at the lows. You're like, there's a wick down there. I'm like, I can't see it. Let me get my glasses. We'll zoom way in. Oh, okay, you're right. It was lower once ever for like 3 minutes on a wick. And you're like, you're lying. It was there too. Okay, fine. It was lower 3 times ever in all of history. Congratulations. We found the worst crypto. Matic. This one's staying pretty strong. You constantly hear like good news about Matic. They're going to give you stamps from Starbucks or something. I don't know if people buy into this bullshit, but there's some potential there. If you're going to invest / trade random cryptos, I mean, at least pick one with a decent chart. And like this one has a pretty decent chart. So getting back above 92 cents is a really big deal. A really big deal. So if it gets back above like 92 cents, obviously $1, and then the potential goes exponentially higher that we're going to start retesting the previous highs. So if there's one good looking crypto right now that we've looked at today, that was it. XRP doesn't ever do anything and still looks like trash. I don't know. Can't get back above the moving averages. It looks like it wants to retest the bottom of this, but we're just basically getting squeezed into this little wedge. We have a pretty clear resistance from like the top right there. We didn't quite get up to it on that last push, and then we came back down. So now we have an ascending support. So essentially we're in a range. We're towards the lower end of the range. So if we were going to get a push back up to the 0.5 at the top, we're talking about 23%. If we should sell back off, we're talking about like 8 or so percent. So arguably you could pull like a 3-to-1 risk reward trade off that right now if you wanted. Me personally, if I was going to go for this, which obviously I won't because XRP is trash, I would wait for it to get to the bottom of the range and then try to take a scalp move back up to retest resistance. I wouldn't get greedy with it, but there's potential there for like 25 to 35%. ADA, literally at the lows, just looks absolutely terrible. Just complete meltdown. Just have fun losing all your money forever. But your mascot is a nerd named Chucky. So that's not bad. That's not bad. BNB. So not looking too great here. It is still hanging out between the 200s, which is okay. As long as it's doing that, that's fine. We talked about the potential scenario for upside. We talked about the potential scenario for downside. You guys know my macro target to downside is $40 on BNB. So does it have to happen? No, of course not. But wouldn't rule it out. We'll know if we get down here to like 250. If we get above 305, I'll eat my words, and then we're probably going to 350. But Berkshire Hathaway. Okay, so this one is one of the ones we talked about where basically if we lose the 200 exponential and simple right here, we don't want to be in this trade setup anymore. We're not looking forward to this. This is our W breakout. This is the back test of the breakout, and we would expect the measure move to follow. But if we start closing below the 200 simple or the 200 exponential, obviously we don't want to be involved in the trade. We can reevaluate. So this is basically our line in the sand right here for this potential upside trade setup. And if everything starts to rolling over, and then all of a sudden the Dow Jones starts rolling over, this looks a lot like the Dow. Basically took out that previous swing high, came up here slightly higher, but didn't take out the macro high. So if this rolls over right now, it's probably going to correspond with, the meltdown that comes in the Dow. And then it's like, well, actually, everybody got really excited, put all their money in one index because it was doing better. It looked like it had a breakout, and then nope, it didn't. Which happens all the time, either intentionally or unintentionally. It either has a breakout, people buy in, it starts to move up, and then actually there's just not enough follow through. Or it could be the bears trying to trap people or looking for liquidity. There's lots of different scenarios. It's easy to like stop hunt people at the 200s, pop above, look really good or really bad, and then actually, psych. So gold, talking about, basically the exact scenario. We're at the 200s. Bear market, we're back above the 200 exponential. We're at the 200 simple. There's a war going on right now between these. If we start getting back above the 200 exponential and simple and it flips blue again, I'm not going to fight it. We do see some bearish divergence worth paying attention to. This looks a lot like the Dow Jones. Whatever happens on TNX and DXY, very important. Silver got up to our target finally after the breakout. Went a little higher here. It's slightly higher. It's not crazy to think we come up here and retest like $25, but that's probably going to be our macro top. Looks like it. We see a series of descending, lower highs. and lower lows. So for backup at resistance or around resistance, seems most likely we're probably getting to the high and then going to come down here and put in a low. So we shall see. Silver junior miners looks the same, retesting the 200s. All right, so we finally got the breakdown to a new low for GSG as expected. So we took out that previous swing low. We obviously are no longer in our channel right here. So the initial target was retest that low. And then you guys know obviously a high, a low, a lower, high, a lower, low. Expecting $18. That is our target. Has been for a long, long time. And it's the biggest blue box I've ever drawn. That's what she said. LNG, Cheniere Energy. Okay, so we had this little ascending wedge. We broke down from the wedge with some bearish divergence as we were putting in higher highs, but lower lows on the indicator oscillators. Measure move takes us down to back test the previous series of highs as resistance and then as support. So they line up with the 200s. That's our target. For me, that's going to be a buying opportunity. And then we'll see, does it go higher? Does it break down? And then we exit the trade and it starts confirming into a bear market. You know, right now, honestly, and you guys are, I know I'm giving a lot of like potential bullish, potential bearish scenarios, but that's how we have to be thinking right now. You know, we're at like key pivot points in the market. You know, like when you draw one line on a chart and it's so clearly resistance, resistance, not quite resistance, but resistance, support. And then, you know, it seems like there's a magnet that's going to pull this back down to support. So at 150, it looks like a buying opportunity. If we break down below 150 and you're like, oh no, I'm stuck in this trade, it's probably going to come back up. And then we see, oh, do we get rejected again? And then it's a bear market continuation. So we'll have a lot of time to figure out if it's distribution before we could just get absolutely wrecked. Or we could just do what everybody else does. And we're like, well, I'm an investor, so I'll just ride it out because diamond hands. Do people say diamond hands anymore? Or did all those people quit? Are all the diamond hand investors, did they quit crypto and stocks and everything? Because I haven't heard anybody say diamond hands in a while. I've got diamond hands when my investments are going up. But I'm quick. I'm quick to throw your ass to the curb. If stuff starts looking bad, I might have been talking good about you. I'm not going to lie. I'll drop your ass so quick. And I'm not talking about just investing. I'm talking about relationships, whatever. I don't play games. There's no reason we should be riding stuff down in a bear trend, dollar cost averaging in. No. 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 Spray some lemon juice in your eyes if you do that shit. Don't be doing that bullshit around here. That's what all the retards do. If you want to learn how to lose all your money in the short term and potentially make money in the long term, do what all those retards do. If you want to learn how to actually trade and make money, this stuff. But obviously, you know, not financial advice. So Mosaic, hanging out, just going sideways at support, breaking down, threatening the lows. We have a slightly lower low right here, you know, that could potentially act as like a double bottom if we come down to it. But I mean, it looks like that's where we're headed. Looks like that's where we're headed. And more likely than not, if we do retest that lows, even if we come back up here, we're just going to likely put in another lower high. You know, we can kind of do it with this tool. Because I'm lazy, I don't want to have to draw a whole extra line right here. So I've just extended this tool out here. So we could see this just really looks like, you know, basically a descending triangle. Potential breakdown. So maybe we come down here, bounce back up, lower high, bounce back. But eventually, we're expecting that $32 holla. CCJ, so we did a deep dive on the uranium stocks. You guys know what's up. We've been trading in this range right here. We had support. It looks bearish. Getting ready for that 382 retest at like 17 bucks. Just did a deep dive on that one. Tilray, just did a deep dive on that one. You guys know we basically took profits. Okay, we took profits a little too early. We took profits at 433. You know, it surged up here to like $5. That's whatever. We still locked in like, I mean, nice ass gains right here. We had a target. The trade setup played out depending which one you went in on, 31% or 38%. Lock in the gains, whatever, no FOMO. Ascending support right here. We started going parabolic. We broke down. We back tested. You know, if we extend this out even further, that's basically what we did, right? We started accelerating. We break down. We accelerate, back test the previous support as resistance. Lines up with the 200s. Get rejected. Break back down to our previous support level. Lose that. What's likely to happen after that? You guys know, I don't have to tell you. Which tool do I want? What am I looking for? Does anybody know? Looking for something like this. You know, basically a breakdown, a back test. You know, I mean, it doesn't have to be like that, but essentially we'd just be back testing like various resistances. We know we have this like massive descending channel. We've poked our head out of it a couple times. You know, we poked our tail out of it a couple times. So here we poked our head out of it. It's likely to act as resistance. So is this ascending green line. Acts as resistance, breaks down after we put in a new low. Maybe it goes lower here first. We don't know how low it's going to go right now. Maybe it just goes straight down and then it's like a weak back test. Another one. I mean, we don't know. So get out of my face. Seems likely though. We're coming back down here to retest the lows. So the most important thing is just, do we take out that low? And obviously we know if we scroll way back, this is our low from forever ago. And you guys know my whole thesis on Tilray has been, I'm looking to get involved in Tilray once everybody else is a loser. Okay? I'm that narcissistic that I want everyone else to be upside down in their Tilray position and be at the lowest low it's ever been at. And that's when I'm really interested in Tilray. Once everybody else is a loser. I'm so stubborn, I have to get the best price of anyone ever. And until we get there, nope. Trade it, don't own it. But there's a deep dive on Tilray, so you can check that out. UNH, United Health Group, back testing that resistance just over and over again. Running into it again. Again, same thing about the Dow. You know, this is one of the stronger stocks in the Dow Jones and a big player, the largest weighting in it. So if this thing does break down here, it's going to look terrible, but it could easily come back down and retest like 517 before it's threatening anything. Goldman Sachs, we talked about the potential of this next leg up right here, because my main argument why I didn't think this was going to end up being the top, if we're going to see further upside, is if this is going to be some kind of like, you know, structural breakout with continuation. If we break down from here, we take out that one, and then there's no way this is a 5-wave structure. So we invalidate it. So the fact that we're breaking down now, you know, we basically can't go any lower without invalidating this, and that's not a normal Elliott wave like impulse 5-wave structure. So still possible we come down here and find support, but we're not going to be able to use this 5-wave structure any longer. But also, it's useful to just randomly draw stuff, so I'll just leave it on there. I'll leave it on there for now. Home Depot, the Dirty D. Best place you want to go get screwdrivers from. So we have a W, double bottom right here. We're at the area. We're above the 200s. This is it. This is what it looks like when something transitions from a bear market into a bull market. Okay? So we're either about to go into a raging bull market and get a 27% gain as we retest the highs, or this will fail, roll over, and we retest the lows and probably break down from then. And then it was just an A, a B, and then a C, something like that. Either one seems like a possibility. We backtest the 0.5. We're just trading inside this channel now. So we're at resistance. If we break above here, I get super bullish for the other like 20-something% to the upside. If we get rejected right here, you know, I mean, honestly, that's what I like about how these markets look right now. It doesn't matter if you think everything's going up or down. There's pretty much a trade setup on anything. I mean, if we just get rejected here again and do the exact same thing we did right here, you know, and the same thing we did right here, but opposite, we just hit resistance. I'm sorry, hit support, retest resistance, hit support, retest resistance. So, I mean, 19% short. Yeah, I mean, it seems okay. Obviously, you're not going to run this as your stop loss, but, you know, break out above this level, you're like, actually, I'm probably good above like, you know, 330 something. But again, there's a nice potential long setup. There's a nice potential short setup. I'm loving it. Caterpillar on the daily. Looking kind of toppy here. Now, it doesn't mean it has to be the macro top. It could retest the 200s, but 204 seems likely. A quick little 10% down here. This looks rough too. Like if we really zoom in on this, I mean, this is basically a double top happening in real time. We basically have, this is our neckline right here. You know, one top, two tops, and, you know, Adam, sharp top, Eve, rounding top, that bubble butt. but likely get the measure move back to the downside. What's that going to look like? Probably something like this. Retest of the 200s. Maybe we close that gap right there. And then, after that, maybe it goes higher, maybe it goes lower. No, I don't know. But seems like there's a decent probability this is coming back down to retest. Caterpillar at 200. And then again, from there, this is a great potential shorting opportunity back to the 200s. 200 is a great potential longing opportunity. So maybe you want to short this. Maybe you want to long that. Maybe you want to do both. Maybe you want to short this and then take profits. And then we see the bounce back up and then you reshort it again. And then we break down from here. I don't know. According to the Fed pivot / indicator of recessions followed by what happens in the stock market, you probably shouldn't be taking any long bets right now. Unless they're like short term. But we also just had a pretty big run. Oh, McDonald's. Speaking of McDonald's and loving it. So we did get the pushback down to support. This is that same area again. The more times we test it, the more likely we are to break. If we do break, come back down to the 200s. So like 245 on McDonald's there. And I think my voice just cracked like a little kid. Amgen. So we closed the gap. Looks ready for a breakdown. This thing had like a nice breakout and then zero follow through. So what was that really? I mean, it was like, is it going to end up being a failed breakout of the little ascending triangle? Or, is it just need to refuel and come down here, back test 258 and then it can go? Again, could go either way. It seems like most of the bullish moves have happened and now we got to see where the bearish retraces take us back down to. Microsoft, we already did. So we looked at all the Dow stuff, Visa, potential breakout, the upside. We've been through this stuff a million times. Honeywell looking a little toppy, little W double bottom, not quite getting the follow through. Traveler Company broke out to new high, back testing as resistance. So this is either a great buying opportunity and then continuation, or basically a throwover, a breakout that fails and then comes back down. Maybe then 171 is the buying opportunity. Deere just retesting that resistance, forever just hang out at that resistance. Seems like it'll come back down here to 416, fill that gap. And then again, the potential if it goes to highs or not. UUP at the lows, that dollar play. We see some bullish divergence, hard buy coming out of the bearish control zone. I mean, it seems like it's ready for a little relief rally. Does that line up with the Fed meeting? Does it line up with the pullback in gold and equities? Probably yes to those things. And then we did the breakdown on Lulu. We finally got the back test we have been discussing for some time. Essentially, we had the descending channel, the ascending channel, and then the back test breakout to retest the 200s, the 382 with the potential trade setup taking us up 30%, 2.8 to 1 risk reward ratio. We see obviously the key level to hold is either the breakout of the descending channel or the bottom of the ascending channel. Potential that, we could get a entry down here for that big move. Alternatively, just not getting greedy and taking a position now, and then obviously making sure we honor that stop loss if we do break down. Again, long-term technical analysis breakdown for all these trade setups and everything on Lulu. If you haven't been checking out the static videos, I did like 5 last week, all between like 10 and 20 minutes long for specific assets, Tesla, Bitcoin, and stuff. And I'm going to do the same thing again this week. And then we're going to stream something between 2 and 3 times a week. And you'll get like 5 static videos a week, give or take. So I think it's better for everybody. You get a little bit of everything. But yeah, that's it for today. Hopefully everybody enjoyed the stream. Make sure you smash up the like button, subscribe, tell your friends, pet your dog, all that good stuff. We'll go ahead and wrap it up there. It is 9:21 p.m. Eastern Standard Time on 12/11/2022. And of course, as always, I'm Crypto Trend Trader, and I'm getting the fuck out of here. Everybody have a wonderful night. But before you go, please remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, everybody have a good one. Peace, I'm out.